Saudi Fisheries, a 46-year-old fisheries company, founded by royal decree, listed as 60/50. And today, a recapitalization bet. In 2025, revenue was 4.1 million riyals. The net loss, 25 million. The fifth loss year in a row, and in early 2026, trading operations were suspended. The market value is 108 times sales. This analysis states that plainly and maps what the restart must prove. This is the complete CFO in business report. 3 signals stand out. First, the collapse is real. 52 million riyals of revenue became 19, then 4. In first quarter, sales this year were 0. Second, the company was selling below cost. Gross profit has been negative for 4 straight years. Third, the reset is underway. Capital cut, farms handed to a partner, and a rights issue approved. The plan runs 6 actions on 1 road. Close the rights issue, with proceeds in gated tranches. Restart only the cash-positive cores. A margin gate on every SKU. Monetize the idle assets. Partner operators for the farms. And Restart KP is published every quarter, sequenced from 2026 to 2030. Each action has a gate before the next. The SWOT is honest, because it must be. The strengths: a 46-year franchise, real assets, and the PAF on the register. The weak points: no current revenue, and 4 years of selling below cost. The opportunities: the aquaculture push, partner operators, and leasable assets. The threats: subscription risk, unproven economics, and history itself. Michael Porter's 5 forces drawn on seafood. Buyer power is high. Wholesale buyers can always import. Substitutes arrive frozen by container. Suppliers are fuel, crews, and feed. New entrants need licenses, but Vision 2030 invites capital in. Rivalry is price, freshness, and trust. The restart must win on all 3. The restart model is deliberately narrow. Hatch, with fleet landings in season. Process third-party volumes on idle capacity. Keep the cold chain earning, leased or used. The ESMAC brand returns to market only with margin. Fresh fish trading is the core. Everything else must pay its own way in. 4 pillars carry the restart. The people pillar, 212 staff. Right size to the work. The technology pillar, catch tracking and temperature telemetry end-to-end. The infrastructure pillar, vessels recommissioned by survey and no branch reopens without margin. And the digital core, a weekly burn dashboard and quarterly restart KP is. Every risk carries a probability, an impact, and a named owner. Going concern leads the register, owned by the board and chief executive. Dilution and subscription risk sit with the chief financial officer. Restart economics are owned by the restart office. Nothing reopens below margin. That is deliberate. Governance keeps the plan honest. The board sets risk appetite and watches the register. The audit and risk committee owns controls and capex stage gates. Management delivers a monthly KPI pack, a quarterly board review, and an annual plan refresh. The context is a kingdom that wants more local fish. Vision 2030 backs aquaculture and food security. Tourism and dining out lift demand, but imported frozen supply caps prices, and licenses only hold value if someone fishes them. The demand pool is real, yet it must be earned. The portfolio drawn honestly, assets awaiting a restart. Fresh fish, Hammer, Nagel, and Shayer. Shrimp farms, now partner operated. A fishing fleet, to recommission by survey. Frozen seafood. The ESMAC markets, suspended until margin returns. Processing capacity. Ice plants and cold stores. And exports, dormant for now. Peer comparison, at live market caps. Now the cohort contrast. Jazan Development carries a similar market value on 108 million of revenue with a small profit. Saudi Fisheries sold 4 million. The price here is a recapitalization bet, not an operations multiple. The chart says it plainly. Valuation, with every assumption on screen. Risk-free, 4.45. Saudi equity premium, 5.01. Adjusted beta, 0.63. The WACC lands at 7.6%. The plan discounts to 186.6 riyals per share. The market says 6 to 5.9. Read the grid, not one number. No buy, sell, or hold verdict, ever. 5 catalysts to watch. The rights issue closes in 2026, integrated tranches. The cores restart in 2027. Gross margin turns positive in 2028, the first time in 6 years. EBITDA break-even lands in 2029, and by 2030, a working seafood company again. 1 grid, 10 years. Actuals in green, plan in blue. Revenue climbs from 48 million to a planned 196 million reals. Earnings per share builds toward 1.14. No dividend is modeled and none should be expected before the restart proves itself. Labeled illustrative on every panel. 5 years in one picture. Revenue fell from 48 million reals to 4. The margin line never crossed zero. In January 2025, the capital was cut by 83%. The share now trades near 9 times book. The market has priced the rescue. The chart shows what it must rescue. 2 pictures explain the year. The bridge shows negative gross profit meeting 18 million of overheads and provisions, a 25 million loss. And the cash picture carries a warning. Operating cash was positive 11 million, but that is working capital release and restructuring flows. It is not recovery. Read it honestly. The transformation map is a road with 5 gates. 2026, the rights issue closes. 2027, the course restart. 2028, gross margin turns positive. 2029, EBITDA break-even. 2030, a working seafood company. No gate opens before the one before it. 9 numbers hold the budget up. Growth of 22 to 630% a year. Gross margin walking from 6 to 22%. Capital spending at 30% of revenue, easing to 7. Zakat and tax near 2% and a payout near 0%. The balanced scorecard makes it accountable. Gross margin per SKU, positive by 2028, owned by the Restart office. Cash burn held inside the board gates, watched weekly by Treasury. Fleet utilization above 70% of season days, owned by Fleet Operations. Every target has a cadence and a name. The 5-year plan, in numbers, revenue builds from 30 million to 196 million reals. EBITDA recovers to 9%. Earnings per share reaches 1.14. No dividend is modeled. All of it labeled illustrative, not guidance. The master budget allocates 2028 month by month. This is a restart budget for 2028. Ramadan leads the year because fish leads the iftar table. January and February carry the peak. Eid holds May high, and every month is gated to contracted volume. 12 months, weighted the way the iftar table sets. 3 final charts close the budget. The Ramadan quarter carries the phasing of every 100 halalas of budget. Cost of goods takes 83. And EBITDA keeps 2. Firm cash compounds to 320 million reals across the plan. The complete Saudi Fisheries report is live at cfoinb.com. That is cfoinb.